first of all, let's take a look at the strategies that have been just running. The scalper is just doing its thing as always. Like, really, at this point, it's nothing crazy. There's a million trades going on. So, really, this is the equation that we're going to talk about today, right? So, here we have a hit trade, a set hit trade, and we have a lot of trades. And this is going to be something very, very important for you guys when you memorize this for what's coming as well, because this really. So I've been working on the prop challenges for a while now. I made a little program that was simulating a lot of trades and a lot of different situations over many iterations, and then I found, well, I wanted to get the challenge so the people that pass are the people that we want, essentially, right? Which are just consistent traders. But then I just took that software and I just ran it on all the other prop challenges as well. So, and then from prop challenges, I was just looking at, overall all like targets that you might have for a day, for a week, for a month. And there's a very, very interesting correlation between those things. And what was great was that it's something that we talk about a lot in the videos. So once we clarify it and once people understand it, then that's going to be the important part in any trading success, or really anything that you do, because the numbers are the same. So here in this on the scalper, we have a lot of trades, right? So we have our set hit rate and our set risk to reward ratio, whereas once again here it's much lower than it should be, because TradingView just doesn't have good backtesting, like not even close to what's up to standard to be actually a viable backtest. So we're working on that. I'm probably going to be done with it within a few days. So other than that, we have a lot of trades, and we take that positive hit rate and positive profit factor, risk to reward, and over a long period of trades, or a lot of trades, we will see consistency, right? Same thing as if you had a coin. It's a coin flip, right? If you flip it 10 times, then you might have 60% hits, you might have 70% hits, right? But if you flip it a million times, then you get pretty close to 50%. Same thing here, right? So as we have a strategy, our three pillars, right? Strategy, risk management, and mindset. Our first pillar, the strategy, as we have the strategy and we know the odds of that strategy, now what we want is we want to increase the sample size, so we take luck and misfortune out of the equation. And that's really what we're doing here. So, and that's something that's very interesting, because as I was making the simulations, I saw that for the consistency, or like in order to have consistency, really what you need is what we were talking about, right? So that's the hit rate and that's the risk to reward, which means that when we trade and when we set up our trades specifically, we need to make sure that we're doing good deals. And it might not seem like that big of a problem when we just enter late into a trade and so on and so forth. And within that trade itself, it might not be a problem, but that is a very, very low perspective approach, right? Because when you zoom out from there, you will see that you don't have just one trade. You have, think about over your lifetime, how many trades are you gonna enter, right? And I don't know, 10,000, I don't know. So the thing is that because you have a lot of trades that you still need to go through, when focusing on only on one trade, you basically setting yourself up for failure on many other trades. So let's say, okay, now I'm just going to break a rule because I'm just going to jump in this trade much later. The risk to reward is much worse, but I'm just going to stay here, because I'm just going to FOMO in. Like, what's it going to hurt? Like, it's just one trade, right? And it might work out, and you're like, oh, thankfully I joined in, even though it happened not according to the strategy or to the rules, but it still worked out. And you might be happy that you did the right decision, right? But you didn't really, because you didn't stick to the strategy. And now you have a bad habit, or you trained the wrong behavior when you're trading yourself. Because what happens now is that the next time you'll do it as well, and the next time you'll do it as well. The thing or the problem, however, is the fact that even if it has worked right now, that it was still a lower probability trade, which means that over the next 10 situations like that, you'll probably lose like 7. Right? So anything that we do, we need to think about those actions on a higher perspective. So any action, any decision that you do in the market, you need to extrapolate that and be like, okay, if I did this decision 1,000 times in 1,000 trades, what would the effect be? Right? Would it be positive or would it be negative? Or would it just completely break my account? Right? So let's say I have, average trades, and then I improve my entries to much better entries, which we talked about a lot. Let's just assume that we have our entries here. What was this along? So let's just assume that we're trading a range, and what we do is we layer in our order, so then our entries are going to be pretty close to the perfect entry, right? So let's assume that we start trading like this. Over 1,000 trades, is it going to help us or not? Over 1,000 trades, this would improve our performance, uncomparably, exponentially, drastically, right? And that's option number 1. Option number 2 will be like, oh, okay, well, I'm just going to go into, in the middle of the trade, I'll just try to catch an existing move. I might be late, but whatever. Well, now we have a risk to reward of 0.5 or 0.6. So what that means is that we will, very much so, over 1,000 trades, this will bite us in the ass. And really what will happen is that if you look at, because I did, right? If you look at back tests that we change something from a risk to reward of 2.8 to a risk to reward of 0.5, that breaks the entire strategy. And you might not notice that because, in a small, focused perspective, you won here. So you're happy, right? But really what you did is you learned or you trained a wrong behavior that will mess up your strategy when you zoom out. So it's always important to zoom out and never treat one trade as one trade. It's one of many trades in a basket of trades, right? So that's something very important to notice. So yeah. So in this simulation, I saw the huge importance of a consistent high hit rate and a consistent risk to reward. What does that mean? That means that really the strategies that we're trading, trend reversal strategies or trend following strategies as well. If I go to the dashboards, let me go to the strategies. Actually, oh, I'm on the wrong browser here, so I'm probably not going to open it. So it doesn't matter. So on those strategies, any strategy that we trade, we try to have high hit rates and high risk to reward ratios. But there's essentially 2 ways you can go about that, and your strategy should fit into one of those in the spectrum, either on the left side or on the right side, but not in the middle. So either you have a low hit rate, right? So you don't win very often, but when you do, you have big wins, right? Or on the other hand, you might not have huge wins, but you win very often. The scalper is an example of the latter, right? So it has a lot of trades. The wins in itself are pretty small, but it has a lot of trades and a lot of horses in a race. So this really, distributes or has a large sample size, so you can eliminate luck out of the equation. Whereas on the other hand, with like a ETH Turtle, for example, or the Solana and Phantom strategies, those are strategies that Solana is actually a great example for this, because what it does is that it probably has a hit rate of like 30%, which is low, but the trades that it takes are huge. So like the wins are like 150%, 50%, 60% on spot, right? So those are, and it's one of the most profitable strategies because it's on the other side of that spectrum. And both work, but if you're in the middle of it, then you might not have a big enough of an edge in order to do that. And another thing is that so these are very, very simple. Like, yeah, it might take a while to wrap your head around it, but essentially they're very, very simple principles, right? There's nothing special or nothing. It's not rocket science, right? You either hit the target very often, so you don't have to have that many wins, that big of wins, because you have a lot of them, or you don't hit the target very often, and if you don't, then when you hit, it better be a big win. That's all. Right? How do you hit the target? Well, we go back into the strategies, trend reversals, ranges, range breakouts, all of that. So that's not that hard, right? Well, now the next thing is we talked about risk management, right? And we're talking about mindset. So risk management. How do we improve our risk management? Well, first of all, that really is our risk to reward ratio. That's our risk management, right? In the performance, not how we set it up, but looking back on our live trades, what is the risk to reward ratio? How much on average do we win and how much on average do we lose or risk? And that being higher means that we're managing risk better, because for every dollar that we risk, we get more out at the other side and in the profits. And improving that will directly improve your overall strategy. So risk management is one thing. How do you do that? Well, number one, you don't over leverage, right? So and that goes back into mindset, but really you're sticking to the strategy and understanding when is it invalidated, and based on when it is invalidated, so let's say here we have a range, we're towards the top of the range here, right? So we need to check, okay, where's the invalidation of this range? Well, it's probably going to be above, this level here. So we're like, okay, well, that means that our stop loss should be around here, but we talked about it. How do market makers take people out of the market? They hit their stop losses, so we put it above and put our orders here, and we would have a very, very good short position with an average order around here, which is pretty much the perfect short, right? And we got pretty close with the scalper, by the way, too. So this is risk management, understanding the market and understanding what our strategy is, when it works, when it doesn't work, and based on that, we can manage our risk, right? So now the next thing is mindset. How do we fix our mindset, or what does our mindset need to be in order to trade the right way? So the main problem that people have, like by far, is over leveraging. And they might over leverage for two reasons. Either they want to get to the large numbers quickly, and because they do that, what will happen is that then they will never get there, right? The compounding effect is huge, but what you need to realize is that the first 90% of that compounding, you barely see any movement, and then it exponentially grows, right? And then the other thing is that in that process, you keep, you might forget that losses are part of the strategy, and when a loss happens and you're unhappy with it, you just start, revenge trading and over risking again and again and again. So there's a little bit of a paradox there because if you traded with a larger amount, it'd be much easier to trade with. But so it's harder to get to a larger, much actually statistically, it's much harder to get to a larger amount than to stay on in a larger amount. Because when you trade with a larger account size, you don't need to over leverage at all. Think about it this way. There's two different mindsets here. The first mindset is I'm trading with $1,000, right? I'm trading with $1,000, so obviously, any trade that I make, basically any trade that I make, is not really going to be, significant for me, whatever happens, because if I trade with $1,000, even if I make 100%, what that means is that I will have $1,000, right? And that's like the best case scenario. That's the best case scenario. So what needs to happen is, like, you're trying to shoot for 100% or for doubles in a trade, and that's just not gonna work out. So really, what you're trying to hit when you're trading with a small account is large numbers as quickly as possible. So you're always chasing, essentially, right? Now let's assume that you have an account that you don't need to grow. Like, how does your mindset shift? Right? So at first, like, let's say you trade with I don't know, like a number that's more realistic. Like, let's say you trade with 100 grand. So when you trade with 100 grand, making 10%, like if you trade with 1 grand, obviously 10% is not gonna do a lot, right? It's $100. That's like, a dinner. But when you trade with 100 grand, you make 10%. You're doing pretty good, right? And you do that a couple times a month, and you don't need to worry about money anymore. So you don't need to worry about being constantly in the chase or constantly in the huge anxiety of growing your account or getting to those numbers, because paradoxically, you trying to chase those numbers is what keeps you not hitting those numbers, right? So that's one thing. The other thing is, and that's a fact, is that when you have a larger account, then your risk management and your mindset still needs to be there, because if you blow a 1K account, nothing happens. If you blow a 100K account, then stuff might happen. It's a larger amount. Like we used to trade this bot that we traded. It was one of the first bots that we had, and we were trading that with on Bitcoin and ETH. We were trading $1 million, like between 500 grand and $1 million, with 5x leverage. So we were, the position size was like usually between $3 and $5 million dollars, the position size, right? So when you enter that, and often you see drawdowns, right? Like as in any trade. So when you enter with $5 million and you look at the P&L and you see like minus $200,000 just by one tick of Bitcoin, right? You're like, oh damn, like that was a Lambo right there, that's gone. So that's another thing. When you get to much larger numbers, then you'll have this issue. But 100 grand, usually most people can get used to it. Now the good part is that you actually trading trading money, meaning that you don't have to be in the constant rat race and trying to turn your $1,000 into $1 million, right? Because the thing is that even if you would get there, right, even if you grew your 1 grand into 1 million, what would happen there is that when trading with $1 million, like, you would have all the wrong mindsets you could have, and you might blow that $1 million, it's a completely different mindset shift. So much better would be to just start consistently, right? And that's the beautiful part. That's what we're working on. That's why we did the challenges too, is that Just focus on consistency right away. Don't focus on building accounts, focus on consistency right away. And if you have the consistency, if you have the skill that's required in order to manage a larger account, then you'll get that larger account. And you don't have to do that jump in between that usually just destroys accounts and grows all the bad habits, right? So that's the point. Um, yeah, man. Alex remembers like when we were trading larger amounts, and there's like one tick on Bitcoin. It was like minus 100 grand, minus 200 grand, and we just look at each other. We're like, well, I guess that's it. Um, yeah, good times. But I mean, now we're much more risk averse, both of us. So yeah, that's the difference. You trade even trading 50 grand, like that's a huge difference than trying to build up an account. Instead of trying to like build an account and 100x in an account, what you're doing now is you're trying to get consistent profits out of the market, and that's all you're doing, right? And then if you trade 100 grand successfully, then you should have no problem trading 200 grand successfully or 500 grand successfully. It's a very similar thing, but you are in a mindset of consistency and getting consistent profits out of the market, which are a small percentage of the overall account size, rather than chasing high leverage and trying to turn your $2 into $200 million. One, like, that's the same thing. Retail traders and institutional traders. Institutional traders, they have the liquidity. They're not going to die if they don't make $5 the next day, right? They're fine. So the liquidity is there, and because the liquidity is there, they have the luxury and the options of what to do in trades. And retail traders don't have that because they're constantly trying to chase that huge win, that 1,000% win or something like that. So magically, through a miracle, they'll get to a large account sum. So that doesn't really work, right? So I mean, that's the idea. That's a positive thing with prop challenges, right? On the side of traders, or on the side of traders and the community. The other thing that happens, which is really, really good, and like that's a beautiful natural law that happens, at least to me, which is that when you set the challenges right, and when you endorse the correct mindset and the correct habits in those challenges, what happens is that first of all, more people pass, obviously, as we educate them the way we want to, but as they pass, overall the liquidity starts to get traded in a very consistent way, with traders proving that through the challenges. And that combines together becomes a very similar effect to the bundles that we have, right? Different strategies, negatively correlated, all of them consistent, all of them profitable. And you put them together, you have one layer above that of consistency, right? And then that in itself can become an index, right? And that in itself has a very, very large value. So as you keep adding consistent traders into the portfolio, you will exponentially increase the value of that portfolio. And on top of that, the performance in that portfolio is going to be obviously more consistent when you have more consistent traders together, right? And that's basically the part, and that's how we have designed the challenges. The important part is that we don't want people that go into a challenge and then just blow accounts, right? That's not the point. We want people that are focusing on the 3 pillars right? Strategy, mindset, risk management, and they're consistent, and they're able to trade real funds consistently, higher funds. So larger funds. So, you trade 50, 100, 200, 500 grand, and your mindset is not growing the account. Your mindset is getting consistent profits out of it. And you have complete full freedom on how you want to trade that, right? But you're getting consistent profits out of it. And with the knowledge with the information that, we've covered in the past 100 hours of live calls, like, all the information is there. It's not rocket science. It's not overcomplicated. All it takes is the discipline of executing or doing the things that you know that you should be doing, right? And as long as you prove that, then you will have a much better position in trading, because you don't have to chase accounts, or you don't have to chase large numbers. You can actually have a substantial account, and then take out money rather than reinvesting money and trying to compound constantly, right? So that's that's an unfair advantage that the institutional traders have, right? So the challenges, I actually have the landing page ready here. So that's what we want to do with the challenges, right? And then on top of that, we've had just looking at traders in the Discord, like, also many traders that they're trading their accounts very aggressively, right? The good part is that when you are trading a challenge, you are limiting your risk to a very specific number, and no matter what happens, that number doesn't increase. That's a positive thing on the trader side, right? On the prop challenge side and the real account, there's some more risk that the prop firm does, but that's why the challenges are here. So right. The idea of the prop challenges was that we don't want to restrict traders in any way, shape, or form. So because we want to distribute our strategies, right? So whatever works for you, whatever strategy works for you, is what you should use and what we endorse using, right? So we are putting in as many symbols as possible, as many, forex indices, gold, crypto, whatever works best for you, whatever you can be consistent in, right? The entire thing is about consistency, because consistency is the only thing that matters, and that's what I've seen. Also, I talked with Alex about it about the simulations. That's literally the only thing that matters in order to have any success in trading in general. Because it does not matter if you had a great trade. It does not matter. Like, if it happened only once, it means nothing. It means absolutely nothing. If you're consistent, it means that whatever you were doing, whatever you're doing right now, you can replicate. And you can bet on the fact that you can replicate it. And how can you do that? You stick to the same rules, the rules that have already worked, and that you're already worked on. So there's a lot of options, there's a lot of different symbols and so on and so forth, and it's all about consistency. So, and you can just read through this when you feel like it, but once again, the main focus here is consistency, meaning that phase one is really a phase to get used to the fact of how you should be trading. Like, in phase one, we want to see how a trader is, actively trading consistently, rather than making, huge inconsistent trades and inconsistent decisions, which is something that, we don't want in basically any market. So that's right. And to do that, we don't focus on limiting factors. We don't focus on limiting different strategies or expert advisors or any of that, or no drawdown in phase one. But what we focus on is, can you sustain this over a set amount of volume? Because that's what matters. That's what you look at. For example, as an example, right, on Binance or really on any exchange, how are the VIP levels calculated? They're based on volume, right? The more volume you trade, the more of a substantial trader you are. And that's a very, very similar example, because once you have that liquidity, you want that liquidity to move as much as possible. So that's what we're focusing on. We're focusing on the volume. So you'll see this in the challenges. The challenge targets, the profit targets are nothing crazy. They're very, very doable. There's no drawdown in phase 1. Phase 2 has a very doable drawdown as well. And there's a minimum trading volume on both phases. And the volume isn't high at all, but it is enough to require you to show consistency over phase 1 and over phase 2. And as you do that, and you over X amount of trades, you show that you trade consistently, because that's the main thing. Like, the bar's pretty low, believe it or not. The bar is literally over X amount of trades, do you blow your account or not? And as like, that's the main thing, because many people do. Like 95% of people do, believe it or not, because they over leverage and so on and so forth, right? So if you can manage your sizing, if you can manage your risk, and you can do that trade after trade after trade, then that's a very, very good example of a consistent trader. So there's 6 challenges for the 10K challenge, the smallest challenge. This is a pretty small challenge, but whoever wants to just really start trading or get into trading at least larger sums than $100, then that's a challenge, right? So we got the 10K challenge, the 25K challenge, and by the way, after passing both phases, whatever the challenge fee is, you get back double that, right? So and that's just because, we know that there's going to be more people that don't pass it than people that do. And no, I can literally say, hey, if you don't think that you can pass it, look at the videos, look at the strategy, get ready. There is no time limit on that challenge, meaning that you can start the challenge and you can trade high probability trades only. If it takes a year, it takes a year. But essentially, if you have the discipline, there is no practical way of not passing the challenge if you're patient enough to do high probability trades. If you want to finish the challenge within 3 hours, right, then obviously you're going to over risk. If you keep it low risk and consistent, then that challenge is going to be much, much easier for you, because there is no time limit, right? So what that means is that as you go through the phases, still more people are probably not going to pass it, but if you do, then that's the first reward, and that's how we endorse the fact that you will be consistent, right? Because to us, or to me, someone passing it and just being highly volatile and would just hit these take profit levels by accident or through a huge move or through high leverage would not really work, because that is not consistent, and it's not going to happen, or the chance of that happening is pretty low in the future. However, when you can trade over X amount of trades, then the chance that you can keep it up is much, much higher, especially when it's over time. And that is by definition rewarded, because you have absolutely no limitations into how long it's going to take or what trades you can trade. So you can always trade high probability trades, and if you trade high probability trades, then you will get through that challenge. The problem is that most people don't do that, But again, it's not rocket science, right? If you keep it consistent, if you do high probability trades, then the challenge is actually going to be very, very simple. There's that. 10K, 25K, then we have a 50K, 100K, and all of those get double the payout back. By the way, double the fee back. There's weekend holding, news trading, expert advisors, all of that is allowed. Leverage is 100x. That's usually enough. If you really want, we can upgrade you to 500x, but there would have to be reasons for you to do that. So based on your strategy, like, you kind of need to explain why you need to do that, and we can do it. Then we have the 200K challenge and the 500K challenge, right? Trading 500K, making 10% of 500K, is a considerable amount when you trade it, and when that's something that you get paid out. So wherever you start, right? If you can pass a 100K account, you can pass a 500K account as well. The rules are the same, exactly the same. So that really, it makes no difference. The only difference is whatever you want to start with. But when you trade, and this goes for all challenges, when you trade live, and when you keep the consistency or keep the performance consistent on the live accounts, right? That's past this challenge, but it's still something that's being tracked. And as you do that, your account is going to naturally increase, because the value or the allocations, the same way we do different distributions on the bundles, different allocations on the bundles, then we have one management strategy above that. That's the same thing that would happen with you when you're trading it. You will automatically start increasing your account just by trading consistently. And the longer you trade consistently, the larger the account is going to be automatically. So this is the starting point, and this is the lowest that your account will ever be, and then it will start growing, right? So when you start with a 10K account, it's gonna grow slower. If you start with a 500K account, then it will grow faster. So that's another important part. And on top of that, anyone that passes the challenge means that there is some form of consistency in the strategy that we're trading. So if you want to, right, if it makes sense for you, we will automate that strategy for you and put it in, within our framework. So it's usually pretty fast and efficient to develop those strategies. And we can take the strategy, we can automate it for free just after you pass the challenge, and have it auto trading, or make an indicator, or whatever works, whatever helps you to keep up the performance, right? And that's the thing that happens when you pass the challenge. You'll become a QC trader. On Discord, you'll also have the role, right, QC trader, but you'll become a QC trader, and our job becomes to make sure that we can help you improve and help you get better. And whatever tools and software and knowledge that we have, we will try and help you out with it to make it as efficient, as easy as possible for you to perform better. Because what happens is that you will become a part of our portfolio, which means that we drive asset value directly from you. So you will, in other words, you'll be treated as a royalty, right? When we have a yacht party, you'll be, you'll have the nicest room, basically, right? So that's the point. As long as you give us consistency, we'll take care of the rest, and we'll make sure that whatever you would like in that challenge, whatever software or whatever indicator might help, we will help you develop that. We'll develop it with you, and if it works really well, if you want to sell it, we can sell it, whatever you want to do, right? But that is like, you will become a much larger authority in your performance and in your trading opinion, because you have proven black on white you've proven that the consistency, or like that your performance is something that we're looking for. So yeah, that's important. And then, there's a bunch of questions here. You can just go through the landing page yourself. Phase 1, there's no drawdown limits, right? So here, really, I mean, you can really trade whatever you want. The point is, though, that you're consistent and you're not volatile. On phase 2, there is a drawdown, which is a very standard drawdown, and as long as you hit the profit and the volume again, then you pass the challenge. The main thing is, though, that you're consistent during those challenges, so you pass them. And as you pass them, what is important is that obviously you keep it up, but then we start developing with you, and we start helping you out to make sure that you're happy, to make sure that you keep performing the way you are, and to make sure that we overall have more liquidity to trade with, have better performance to trade with, right? So that's that. That's also why we have the minimum volume. Crypto, Forex, there's a list that you'll see. There's a lot of instruments that you can trade. You can trade any strategy that you have. Initial fee gets refunded double after passing. Profit split is 90%, you keep 90%. There's 100x leverage, you can upgrade it to 500x. You can use expert advisors, you can hold over weekends. The liquidity is with our partner, and news trading is the same. So so all of that is allowed. So I've never done a challenge or a loss during the challenge. They have to pay back the losses. No. So the challenge itself, right? The challenge itself is on a virtual account. Once you pass the challenge, you will get funded real funds. So and here's the thing, right? That's why the challenge is there in the first place. The maximum that you can ever risk, right? So let's say you trade a 100k account. So as you trade a 100k account, there's 100k that we need to put up. So our risk is, if there wouldn't be any risk management, our risk would be $100,000. Your risk, your largest risk that can ever happen, is whatever you paid, right? And on top of that, I mean, if you blow that account, you at that point you got your bonus at the first payout already. So your risk is the only risk you have is not passing the challenge, and instead of 100 grand, that risk is gonna be what, like a fraction of a percent. So yeah, you don't have to pay back anything. However, when you're live trading, then if you make a 10 grand loss, then that's our 10 grand loss, right? That's why it's important that you're consistent. And when you're consistent, then we are. That's also why we have multiple traders and we're distributing. But it's essentially the same thing as when we're trading 100 grand with the bundles. It's the same thing, except that I love the fact that there can be a lot of different interpretations from a lot of different people with the same focus, with the same performance, and that will just grow our strategies, our performances, the Discord, the liquidity, the asset values, all that exponentially. Thanks for answering the question, by the way, Saifa. Really that is all that I wanted to cover today. I'm still not over Saifa's profile picture. It's gonna haunt me at night. I was up to like 7 a.m. today, running the simulations with the strategies. So at this point, these strategies are doable enough for people, but also show consistency over multiple trades, where this strategy that you're trading has validity and low volatility, which is something that we want in our portfolio. And like I haven't looked at other prop firms specifically. I know for a fact that like 90% of prop firms, like their business model is front end challenges and that's it. I have looked at a couple challenges and simulated them, and that's literally what it is. There are a couple things that you look at and it just drops the performance of people a lot, but that's not the point. Like, yes, this will be profitable on the front end, probably, but this is crazy to me. Like, prop firms have good traders, and they don't utilize them as efficiently as they could. Like, just building a layer of a strategy at those traders is probably the most efficient thing, most profitable thing that they could do, and like no one does that, which is crazy. So that's something that we want to do, and we have literally already confirmations from different hedge funds and investors about the actual value of a distributed portfolio by consistent traders that are proven with the challenges, and then keep up the consistency for a couple months. So you will see your account grow automatically by just being consistent. Number one, and number two, we'll make sure that you are treated as a professional trader, like an athlete, right? That's the point. Like, I was an athlete. I know how nice it is to be treated like an athlete. That's how traders should be treated when the performance is there, right? So that's basically what we're trying to do. And the challenges are there. They're ready to go. So you can literally check out right now, and it's going to work, and you'll get your account within a few minutes, because all the backend stuff is ready, the liquidity is ready, the accounts are ready, the challenges are ready, all of that. So yeah, that's basically all I wanted to cover. If you guys have any questions, let me know. And other than that, that's all I wanted to cover today. Really important is the consistency, and I just see it. Like, obviously I keep saying it, right? But then I just see it as confirmations in basically anything that I do that has to do with like numbers or math or performance. It's the consistency, and the question is, how can we as humans be consistent in market? And that's through the 3 pillars. We have a strategy, we have the right mindset of risk management, and that will open doors. And this challenge is specifically designed for people that have been watching the videos and are trading the way that we're talking about trading, which is consistently. So yeah, I think that's what I'll leave you guys with. And if you have any questions, let me know. You can DM me as well. And yeah, that's all. And I'll see you guys in the Discord.